welcome to you, wherever you may be in God's green garden this Monday, the 21st of March. Glad you could join us. What's going on, guys? Not a lot, I've got to say. Same SH1T, different day. Is that true or is it not? Look, it's a speechathon. It's an absolute speechathon coming up this week, certainly for the first couple of days anyway. I think that's probably a good thing because it might just make the market a little bit more, I don't know, feel good. Can I put it that way? I don't know. Next week, 1800. Ooh, what happens next week, 18? Oh, right. Yes. Okay. We've got a shift in time, Gary. I think that's probably right with the UK. I'll just check on that. I haven't checked. I did check a couple of weeks ago when the UK were going on to daylight saving. This is that time of year where we Aussies, Gary, get to have a little bit of fun because today it's, 5 to 7 in the evening. Next week it's 5 to 6 in the evening. And the week after that's probably 5 to 5 as Australia comes off daylight saving. Anyway, we'll tackle that when the time comes. But I will check on that. If the UK are going on to daylight saving, which I think they are from memory, then we will indeed be 1 hour early for those of us in Australia and Hong Kong and Singapore. I know that's not going to be good news for Hong Kong and Singapore because it's the middle of the day almost. Anyways, it is what it is. London opens when London opens, and that's when we need to be around. Speaking of which, I need to share my screen and have a look and see if we are willing to trade the pound as a breakout today on the Open of London session. The effective range from Friday and thus far today is 87 pips. Now, if we were to go long here, the immediate resistance comes in pretty quickly. Are we expecting that might get hammered? And that's kind of the thing. I think we've got probably a few to worry about here. Where's that level? Those levels, should I say. So we'll be entering here. That level is there. So if we were to actually take that on, that level there, we could probably get a fair bit out of this. Probably up to there, one would think. What's that, 72 pips? Our risk was what, 80 something. So it's still not good for mine, the upside. And if I am thinking of trading pound US dollar long, which frankly I am, I've got to say, I would be thinking best case scenario or best trading opportunity for my purposes would be allow that to break, come back and retest it, that being, in my humble opinion, a potential neckline, because we have, where's my little pen? There it is. Because we have, pretty clear to me, left shoulder, head, right shoulder, and question mark. Actually, I heard a song the other day that I hadn't heard for many, many years, and those of you in the room who are less than 69, that's everyone, right, except no one on less than 69, but only just, would not have heard of it. On the baby's, knuckle on the baby's knee, where will the baby's dimple be, right? Sorry, it's Monday, and I get a bit funny on Mondays. Question mark, where is the right shoulder going to be, if indeed there is a right shoulder? Is it here? Is it here? Or are we not there yet? That's a great question. And the one that it really is uppermost in my mind. At this point, I can't really give you an answer to that. But if I were to see price start to fall, then I would be thinking we're in this vicinity. And that may be his target area. Have I got a reason to trade that at the moment? Answer no. I think it's question mark time, and I really don't know which way this is going to go. But for now, do I want to trade the breakouts? No, because we're going straight into resistance without a good reward. I think the downside is probably better at this point in time in terms of risk to reward than is the upside. But that doesn't really mean that we just jump in and go, all right, okay, because it's better, we're going to trade it. That's not kind of what we do. I mean, you can do that, feel free to do that, but it's not going to get you too far. I don't believe in terms of longevity. So entering there short. Risk is, like I said, about 85, 89 pips, and you're trading straight into support here at 21. And your potential reward is around about where you need to be taking profit, right, is still less than 1-to-1. So I can't give you a clear run to a TP1. So therefore, it's a no-go zone for me today. Updates. If you are indeed trading Euro Aussie, as expected, we are getting a little bit of a bounce today. Where does that go? Great question. Do I want to get back into this? Well, I'm still in it, but do I want to scale into this? Answer, yes, I certainly do. Why? Well, I think, like I said, when we did the analysis for the initial trade, we'd clearly broken this strong support level. And I mean, I know this is weird, but if you consider that to be a head, there's umpteen shoulders here, suggesting to me that once that level was broken, we would see strong downside. And that's kind of what we've been seeing. I think that level there is probably the next breathing space, if I can put it that way, probably a little bit lower, maybe in there somewhere where it's been full support through here, resistance through here. So I can totally see that level, 140, 170. But I think the biggest level that I can see underneath this pair is here, where we've got support, resistance, resistance, support, support, support. I can't see why this can't get down to this level, 138.50. Of course, that's a fair way from where we are, and we've only got a tiny portion of our trade left. When I say a tiny portion, that's a quarter of what we risked. But that's got to be my target area, which is now 1,000 pips away. So do I want to build into this position? Answer, yes, I do. Happy with what we've got at the moment. Yes, that's true. But I totally see a retracement phase coming up. And I'm denoting that with not only the box range, but the potential for this. Again, you know, if we're talking symmetry, and I do often, I'm looking at or potential here again for a left shoulder here, head, and maybe a right shoulder forming right up in this area here, which is below our entry, but where trailing stop now is at, actually haven't got it on this chart, but I think it's, memory doesn't serve me well. I'll check on that. But we have trailed 100 pips from entry, that's right. So our trailing stop is now at 150.75, which is around about that area there. So that's where our stop is at the moment, and I think that's reasonable. Weekly pivot is the obvious potential bounce point if it does rally, and it's there that I will start to look to scale into this. If we get a false break of that trend line in particular, then yes, I will certainly be doing that. But it's this area here that I'll be looking for a lower high. Anyway, not much more to report on that one. Look, there's 2 million game changer bars this week. Well, you know, I didn't count them, but it's just a little bit less than 2 million, I must admit. I'm not going to go through them all at this stage. If we kind of run out of time, I might. But I think the best of them is actually the worst of them, if I can put it that way. It's the pound pairs. Now, the pound pairs last week put on pretty much a lot of upside. We were looking maybe late in the week, but put on a lot of upside. You can see in pound US dollar on the daily chart that 1, 2, 3, 4 out of the 5 days was bullish, right? And I'm okay with the bullish outlook on pound US dollar, but impossible to just jump in here. Got to see a retracement. And the same is true of every one of these pound pairs, in my humble opinion. I think the one I'm favouring more than others is pound Kiwi. The reason I'm favouring the pound Kiwi more than others is that, and I, as I said, I can't jump in right now long, that's for sure. But we've had downside, 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 downside. It's been absolutely hammered, this pair. And we're now at a, or close to, a very strong support level. It's here that I would like to pick this up again. And I'm a bit of a fan of pound Kiwi, have been for a long time, but haven't found a way to make any money out of it, or any substantial money out of it. This may well be the next opportunity. I'd love to see this break that level, 189.40 odd, as I've got it, then climb back above it and retest it. Okay, where are we now? We're in March. I'm talking March, April, June, July, August. So relax on that. It's not coming up anytime soon. But if it does come up on a small time frame that we happen to break that level and get back above it, then I'm more than happy to go long on pound Kiwi. But it's not just yet. We're getting signs right now of a base being formed, no question. And if I were to see a rally followed by a higher low in here, then I would look to trade this long. But I'm kind of pound bullish this week so far anyway, despite what the game changer bars are potentially saying on a couple of these pairs. Pound Kiwi is telling me short, and that's the one that I'm more keen at than I am on any of the others. Pound Kiwi long, but it's got to shape up, and potentially there's a little bit more downside as well. Aussie pairs, every single one of them just about is saying go long as a result of last week's strong price action. Bounced off the monthly pivot on Tuesday and just see you later. But where did it go see you later to is the question. And the see you later to answer for me is, well, not sure yet. Are we at the resistance level that makes more sense than any other? The answer for me is no, because that resistance level is here, about 75.50 mark. Where it's been strong support and resistance. So I think there's probably more upside in the Aussie pairs. I was a dead set keen aficionado of a short last week on pretty much all the Aussie pairs. Didn't set up. For that reason, I wasn't in no trades. But I think I'd be very, very hesitant to get short the Aussie pairs at the moment until they do hit this stronger resistance area. That's kind of where I'm looking at the moment. That double bottom we were talking about a few weeks ago has certainly, to my mind anyway, started to really shape what's happening on Aussie pairs, certainly against the dollar here. Dollar's interesting. You can have a look at the dollar index as we normally do, and there you will find an index that has really come off its highs and is now back into this range. Expecting more downside? Well, from the chart I am, yes. I've got to have a question mark on that because the Fed, as we know, did what it was expected. But look, to be fair, I haven't read the statement yet, and that's very lax of me. I should have read the statement because the headlines I read suggest that Powell has said 7 times this year. And I'm going to bring Ash in on this. G'day, buddy. Happy new trading week to you. Yeah, look,
what's that, sorry?
Okay. I said I'm going to bring you on here because the dollar, having come off its highs, and now put in a lower high on the dollar index I'm talking about. And okay, we're expecting exactly what happened in terms of an interest rate rise. And look, I haven't read the statement, like I said. I should have, which is kind of lax of me, but my question would be, how far does this have to go down before the market readjusts? Okay, we're going to have potentially, according to Powell, 7 interest rate increases this year. Is that what he said?
Yeah, well, I think there seems to be sort of conflicting views from the Fed's members. You know, some did say that we get up to 3% by the end of the year, but I think others are sort of saying that we're going to go up another 2.5%. So that's probably why the market is not really sure what's kind of coming, and it might well be that, you know, that there's a little bit more news or maybe another meeting that needs to happen before we see some genuine movement in the dollar. You know, and we saw it in the market last week. The market had a really big rally. The equity market had a really big rally last week. Pretty pleased, and I suppose if you look at how things are being expressed, it would suggest that they are quite comfortable with the fact that there probably won't be quite as many interest rate hikes as was first announced. Some of the data has been a shade weak from the United States, and I guess that's what people are looking out for. And it might be one of those perverse scenarios where you get weak data, but it actually does help equities because it might actually ease back what Jerome Powell and cronies are going to do. You know, just on your pound Kiwi scenario, yep. You know, again, you know, the data on that is fascinating because the New Zealand have had a reduction of visitor numbers, and it is very reliant on tourism. So the last print was a big reduction on visitor numbers, and also building permits. As I said last week, mate, building permits pretty dire, really dire actually. Now these two numbers are potentially isolated, so we need to see what happens next. And what I'm finding quite interesting with the Kiwi is that they moved first. So do they yep. have the effect of those movements first? And maybe that's what we may well start to see. So and the pound, the other way in many respects, you know, unemployment falling, average earnings going up. So there are numbers which would suggest that actually the pound's pretty durable. You know, the fact that we've come down so fast and so hard over the last few weeks could be a little bit surprising. So the fact that it's on support here and you've got potentially sort of conflicting numbers from one nation to the other would suggest to me that, you know, your theory of pound Kiwi long is a good one. That's the way I would view it. Yep. That the pound, you know, should bottom out here. But what's going to happen next? You know, this is the coin flip, isn't it? And as I say, equity markets reacted really well at the end of last week, and they continue to today. Actually, you know, I've got a short sitting in the FTSE 100, but I'm not going to add to the short until we pop up again, and I think we probably will. I think that there's probably a buying opportunity today, if anything. So I'm looking out for that. We got Christine Lagarde. I don't know if she's finished speaking, but she certainly was speaking. And it seems to be the narrative is all about these interest rates right now. Will they be able to move? Numbers don't seem to match things up. ZEW numbers, economic numbers from Europe last week as well, absolutely atrocious. And I think this is the big balance. And maybe this is the reaction that we're seeing with the dollar. As I say, numbers from the dollar aren't really supportive of a hyper aggressive move. You know, are they in isolation? Possibly. But is it a trend? Are we starting to see the beginnings of, you know, what might actually come to pass over the next 3 to 4 months? And people are there going, there's no way they can do that. You know, there's not a chance they can raise interest rates 7 times this year.
Well, they can't do that because they haven't got enough time to start with. They only meet every 6 weeks, 8 weeks, or whatever it is.
Yeah, well, I suppose.
Oh no, they can 7. They'll just fit it in. So I guess
I mean,
that's the equation, isn't it? Yeah.
Yeah. Well, there's 6 left. There'll be 6 left. They've done 1, so there'll be 6 left, I guess. But I don't know, mate. I mean, it's, you know, it's going to be down to will the economy be able to handle it? And the most recent data, and that's all you can go on right now, the most recent data suggests there could be a cooling here. And if that cooling gets too aggressive, then you know, further rate hikes that take us beyond 3% on interest rates, I think it's pretty unlikely.
Yeah, I can't say it, but I mean, no idea at the end of the day. But to me, it logically doesn't make sense. But
no, and also
doesn't come into it.
The equity markets don't make sense in that same regard, Because if there is going to be a choking of the economy, then at what point do you say, well, actually, you know, there is going to be a recession, and as soon as there is a recession, then we're going to start to see these equities start to cool off a bit, which is why I'm leaving the short on the table. You know, I haven't yet hedged, and at this stage, I'm not going to hedge. I'm actually going to take another position short, because I think that there's something coming down the road, and it's always a question of timing. You know, when does that come down? I can tell you the COT data that I saw over the last week is pretty nervous. You know, on taking a position. You know, it seems quite nervous on taking sort of like big positions one way or the other. And it may well suggest that that some ranges are in play here. I don't think, from what I've been reading in data terms over the last week, it doesn't seem like we're going to get that much in the way of breakout this week. You know, and which would again support your pound Kiwi. You know, to kind of like find some support down at certain levels. So I wonder whether we are actually trading levels this week, and your strategy probably comes to the fore and probably does pretty well.
I'm pretty keen on it, but it's got to get to that level, I suppose, before I'm more keen than I am at the moment.
Yeah,
we'll wait and see, I guess. It's as simple as that. Hey, George is joining us live today as well.
Yeah, brilliant.
I wonder is he here?
Here
he is.
Here somewhere. I can't see him. There I am.
How are we going, George?
Going well, thanks, guys. How are you guys doing?
Yeah, I think we're
mate,
pretty grand.
Top of the world, you know. Yeah.
It's good to see
I
you.
always say top of the world, although I'm quite the reverse.
Yeah, it depends what your perspective is, doesn't it?
It does.
Well, we center of the world, right? Central Africa. We center of the world.
Yeah. Actually, how far from the equator are you?
Couple of hours by flight, I think. No, maybe 4, because I'm in South Africa. Zim is 2 hours. 4 hours away by flight.
Okay. Yep. I'll call you a Jayberg. You're a little, you're lower.
A little
okay.
south. Yeah.
So you're not burning hot there.
No, it's strange weather today. Actually, it's just been overcast and raining. But it's it's the end of our winter, end of our summer. How does it go? Summer, autumn, winter, spring. We're going. Oh, this is bad. So we're going into autumn now, and then winter.
Yes, that's right. You're in the southern hemisphere, so that is exactly how it'll pan out.
Think of my nursery.
And actually, speaking of which, Ash, you're losing daylight saving, or you're on daylight saving next week, right?
You probably are more informed than I am, mate. I know it's coming. I just never know when.
Gary put it in there.
Okay.
Look, I'll have a look, or if you can have a look, that'd be great. So we can actually tell you guys that we will be 1 hour earlier next week. Now, George, that's going to confuse you as much as it confuses me, right?
Do I stay on GMT +2, right? I don't change my time, my home time.
You don't change, but London Open will change.
Okay, it'll be an
March
hour.
27th.
All right.
Yep. So London Open changes next Monday.
Okay.
So those of you who are not in UK time, you will have to be 1 hour earlier than normal to catch us.
Well done, mate.
Got it.
Oh, hold on. Okay, we'll David, we will get to your question in a bit. Let's get George's analysis on the markets, and then we will come to these questions.
Yeah, sure. Thanks, guys. Let's see if I got powers. I have powers. Brilliant. I was just listening to your commentary on UK 100. Interesting enough, I'm in a long, I'm in a trade for the first time in forever to show guys.
Oh, brilliant.
Which I took it down here.
Nice.
Very nice.
Stop was down here. So don't worry about this. This is just the low of the earlier session or present low of today. But now my stop is here. So I'm gonna kind of leave it until I get a pullback in here somewhere. Hopefully, if it doesn't just retrace all the way and come all the way down. You know, you sometimes get these strange candles, but I'm hoping to get a pullback to this rising 10 EMA. Remember, I always talk about it as indicating strength of the trend. If I get that pullback, and if I get a nice reversal entry low test candle somewhere within here, I will look to take that trade. I will then look to move this stop to the low of whatever we have here and make some profits. But other, I'm going to leave it like that, and hopefully it doesn't turn on me.
Well done, mate. Just incidentally, there's a gap around about 15 pips above where we are now.
All right, so if I'm going to put my daily up, it's going to look a little bit messy. Yeah, okay. So here's where we are. What I have of interest, which I really have to watch, you know, if this trade keeps going my way, when you get above the high of yesterday, there's a pretty strong level there, which is a high of 2021. So I need to be careful there. See if we get a breakout. That would be fantastic. If the bulls are strong enough to crack above that. But more likely than not, there will be some bounce, and I've got to see if it turns into a reversal.
Yeah.
A lot of trades, if we in any trades by that stage, or if it gives me a technical level to put my stops up. But the key thing is just to keep trade managing at the moment, because this is
great work, mate. I have to say your timing was pristine on that. Friday was really the only rally, wasn't it? I was only clean rally. That's really, really good.
So one of the little videos I posted was to look at those last 3 days, you know, before yesterday. So that yesterday is Friday actually. So that's a good candle. But if you look at the last 3, for me, they tell a story to say we might get some bullish momentum, which is what I'm trying to capitalize on as far as it goes. So that was pretty key there. I'm also looking at Hang Seng 50. They're closing.
Sorry, George, before you use before you get rid of the FTSE, can you just go back to the 5-minute chart? I want to ask you a question, if you don't mind.
Yes, let's do that.
And this goes to your methodology, right? So your entry methodology.
Yes.
So to my mind, you've either entered above the bullish high test bar, right? Or at the close of the next bar.
That one, yeah.
So which one is it? Is it
so it was $2 above this, which happened to be at the close of
right. That. Okay.
So
the methodology is you've cleared the moving averages before entry. Would that be right? Is that part of the methodology?
In fact, that's a good point. Remember, so there's 2 buckets of strategies. One is the reversal strategies, the one that I say get knocked out more often. You know, 40% chance of success, but you got to manage it. And then there is the trend strategies. Now, this particular entry was a reversal strategy, because this whole pattern is part of a reversal strategy. The market could keep on going down. Okay. But in a reversal strategy, I look for, let me just shift this to this side. So that double bottom, very key for me. Okay. Then I want to see either a higher low from there, or if we get an attempt to resume the trend downwards, which we did, where is it going to turn? So that level there was a measured move of the gap down on the open. So we had this gap down here on the open from here to there. A gap down is like a news breakout. It could be bull or bearish. So I always want to see whoever created that gap down wants to create a measured move. So that's a measured move of it. So that's the level of support. So the market coming down to there is not a surprise, because they want to get to the measured move. So the fact that we're at a double bottom here and then a lower low creates 3 pushes down. 1, 2, 3. That's a wedge pattern, which is an indicator of strong counter forces, because the market has tried to go down 3 times, 1, 2, 3, and they failed. So that builds up the case for the bulls. So that's first tick. The second tick then is to see a double bottom. Okay. Always talk about the 6 candles of separation, which was immediately one after the other. I considered as one. So that's like one good double bottom. Then I want to see a higher low. So the first one that I saw was that it was a little bit clumsy coming after those dodges, like buying above trading range. So I let that go. Then comes this one, which looked very neat. So $2 above it happened to be just at that candle. Now, here's another thing. So if you'd seen that and the kind of, should I or should I not, then you see the next candle, just buy at the market. Stop has to be down here. So that could have been a buy at the market entry as well. Okay. So once you've had that reversal and you get a trend, a breakout, so you're shifting now from reversal trades. Now you're looking for trend trades, and trend trades are simply waiting for pullbacks. First pullback to 10 EMA, and let's see what we get. And if you get that entry coming in, then you can take a trade. If you don't get that, you wait for the pullback to the 20 EMA and manage it that way. So if we start to get strong bear candles closing beneath the 10 moving average, possible trend reversal, you don't exit at the first one. You wait to see if you get a follow through, then close the trade. This level here that we've just broken about, this is 50% of the gap down. So these levels only is 50% and 200%, which is the full extension. That's all you got to remember. Now, those are key. Remember, 50% also said if you get a news breakout, red news candle. So red news is red news announcement, whether it's a bear or bull. The 50% is what I always look to get into the trade. So if we pull back to that and bounced off that, and it's giving me, I'm gonna let Q in because I got powers. And if you bounced off that, then we have gone short, but we've broken above that. I just want to see if we get a follow through candle, which is fantastic. Now, as it's looking, any pullback at this stage, unless something catastrophic happens, should not take me out. So what I'm going to do, so I can have some coffee and not worry about my big loss, is just to move that to break even. So I'm a happy chappy. I can just
George, what I find fascinating about this, I mean, the measured move that you've drawn is superb, and what I find really interesting is that is exactly pretty much the place. If you go to a 4-hour chart, the place it returned to on that measure move is the structural breakout point.
It's a bit of a mess.
I mean, look at that. Yeah. Look at that on the 4-hour chart. Look where it came back to.
That's interesting.
Yeah. So right on that structural breakout point, it has to break through that area, comes back to that area, and it's matching the measured move. Which I don't know whether that sort of adds further power to what you're looking at, or whether you even were looking at that. But when you showed me that number you got in at, it was interesting because I looked at the same number, but for completely different reasons.
Yeah. So what I've stopped doing is looking at any other time frames, because you do get confirmation, fantastic, but when you have a conflict, you're stuck, and you only stuck. Because now, what am I trading? Am I trading the hourly, 4-hourly, whatever the case may be? So I'd rather just look at a particular time frame and stick to that. When I have ranges and overlapping bars and I'm not clear, either I put in a line chart to try and get clarity, or I can go up a time frame to an hourly to say, hey, what's happening here? Is there something I'm missing? That I do. But that's only when we are in a trading range and overlapping candles, and I can't really see, I can't get clarity. Then I do that.
Yeah, brilliant.
So George, back to the question. That was a fantastic summary of your methodology. But the question actually was, if, let's say your analysis, as it has done, says you've got to trade that second higher low, right?
Yes. Yeah.
Pardon me, which is exactly what you've done.
Yeah.
If your entry would have been below your moving average, would you have taken the trade? So in other words, would you have traded straight into that resistance area?
Yes. For a reversal strategy, yes.
Okay, cool.
Only for a reversal strategy, not for trend. And that's and that's simply because everything to the left is giving, I'm taking things in my head, and everything in the left is saying, yes, we're in a trading range, but there's enough forces here that should blast through that. But the reason I put my stop down here, not here, is that we could get this. This could have come down here and bounced off that, or even bounced off that level. So that's why the stop is down here. And it's a reversal.
The market
strategy.
does like to put in that last little low, doesn't it?
Yeah. Yeah. And then once it's gone up, then yeah, you're out of the reversal thing. Now you look for the easier ones, which is trend strategies.
All right, mate. Grilling complete. Move on. Thank you.
So just a couple of others that I'm looking at. What I've done interestingly, which is just to help my brain not to get confused. When I'm not looking at anything, I'm now just putting on the 15 minutes just to keep a bit of a high time frame view on it. The 5 minutes is what I'm presently looking at. So I am looking at Hang Seng 50. The guys have just closed now. So they'll open in 45 minutes time. And this is also an interesting one. I'm looking to go long here. Okay. And the reason I'm looking to go long, there is a measured move of that gap down and follow through. So this is a little bit different. We had a gap down and follow through. So this is a strong bear trend, and the measured move is down here, which is just above the low of yesterday. But then I have to ask the question, why did the bears fail in the first part, in the first this first session to, it's actually the second one, right? Why have they failed to get to the low? Why have we created a double bottom here? So there's a bit of weakness on the bears. I mean, they did this fantastic. I didn't get into it because I didn't see an opportunity. So when I say opportunities on the open, I would have loved to see that candle, the gap down, a candle, one or two pullback, two pullbacks to the moving average. Then I can get a double top off the moving average. Then I can trade that. But I didn't get that until it went sideways. So there's no way I'm going to jump into here. I'm just going to watch it and just wait to see what happens. But if you ever look at this, if the bears are strong, why do we have a trading range? Why do we have two-sided price action? Why do we have a double bottom? So for me, it's building a case for the bulls. So now what I want to see is a close above my EMAs. There they are. But I want to see now if I can get the market coming back after the double bottom to give me a higher low. May come back here within the moving averages. Jeff, doesn't matter. If I get a higher low, I will take that and see if we can then go and crack through these levels of resistance. We've got a couple here.
You're a man after my own heart, mate. That's exactly what I'd be looking for.
Yeah, so there's a high of a trading range, 17th of March. I can put that up, it was a couple of days ago. There is also the 50% of yesterday's range. So if the bulls are strong, they will crack through that. But any trade here, higher risk, I guess, lower probability. But if you can get in, the rewards will be much more than taking a trend trade, which you must take if it goes your way. Then, so that's Hang Seng 50. We'll see when they open in 45 minutes time. Then the other one I'm looking at is the US 500. Okay, so US 500, again, that double bottom is another push down, second push down. Here, this is the low of our present low, way above the 50% of yesterday's range. So, the bulls are strong enough to repulse the bears, if you want to put it that way. Higher low double bottom, nothing clean enough for me to trade at this stage. Why would I have taken that again? Those 6 candles of separation keep me out. That's 2, 4, just like 4 candles in between. I kind of see it as just one play of forces. I would have loved to see something else a little bit lower. So I'll wait a little bit. S&P 500 is interesting. There's no need to stress about it. You wait for the US markets to get more strength if nothing sets up now. So that's presently where I am, gents.
Really good. Really good. Thanks for such in-depth analysis. David's noted that there's similarities to Al Brooks, and you understand that material really well, don't you? The Al Brooks material.
Yeah, groomed, bred, fed, spoon-fed, force-fed.
Yeah. Well, it's amazing, isn't it? I mean, I was just thinking while I was kind of reading it, I was thinking there's so many different ways to look at the market. But if you get efficient or proficient, I should say, at something that you can trust, then you've done the job. And because I've read the Albooks material, but it never resonated with me. But it did with you, didn't you? And you really grabbed it, and you do thoroughly understand what the methodology is.
It's gotta be, Ash. I mean, and I think using the right words. If something grabs, this one has to grab you, because it's a lot of work. I mean, the guy's got his 100 hours of videos, and then he's got books, and that kind of gets you into the game. Then you gotta put just thousands of chart reviews and hours for this thing to come alive. Otherwise, you won't get it. It's
But maybe that was the problem. Maybe I was just too lazy.
Yep. Hands up. Me too.
I don't know about being lazy. It's just, if it doesn't grab you, you won't do it. You know what I mean?
Yeah. Well, and it was that. It didn't, and it was quite early on that I read a lot of trading books, and a lot of them say something that I find interesting, but it's got to be sort of like a bit more in depth than that to kind of go, right, that's the approach for me. And I just found sort of carving out really, I guess the way I understand things was just a bit simpler, but it obviously works. I mean, I think it's fantastic, mate, and I think it's brilliant that you've actually kind of taken this scientific approach. Is almost that the way the way you describe it is very scientific, which seems to suit your personality as a doctor. I suppose you're maybe more drawn to that.
I think it's that it makes sense, right? There's so much to it. If the science behind it makes sense, okay, now this is making sense, so I can trade it.
They're the magic words. If it makes sense, I agree with you 100%, George. If it makes sense to you, use it, do it, trade it. And you know what? There's that wonderful thing in life. You've only got to be good at one thing in your entire life. And if that's trading Al Brooks, or if it's trading garbage like I do, or whatever the case may be, or if it's being a skier, like what Eddie the expert, Eddie the flyer, whatever he was called. Eagle, that's it.
He wasn't an expert though.
No, but he was famous for it, right?
He was famous for not being an expert.
Or the Jamaican bobsled team, right? They made squillions out of it. So you only got to be good or bad. I had the same discussion
yesterday. I had the same discussion yesterday with cousins of mine that we were talking about music, and some of them are good at piano, some of them are good at guitar. And I was saying to them, that really is the key, is that you don't need to be good at guitar, piano, drums, everything. It's just picking one. But even then, you could say the same with trade. I need to be a good trader, not a good investor. I need to be good at this chart, whatever. But you can go even further in. And pick, as you always said, Jeff, to me before, you're either really good at a strategy or you're really good at a market, and that will see you through. Get really good at the FTSE, or really good at the euro dollar, or really good at the slingshot, or really good at the material that George is talking about. You only need to be, you pick a field, and then you specialize in that field with a certain methodology. And as you say, you only need to be good at one, and you don't even need to be amazing. I wouldn't class myself as
plenty of not amazing traders around. That's
well,
for sure.
I don't think I'm particularly amazing, but I make money, and that's really the gauge of whether it works. I mean, that's all I really care about. I'm not bothered about being, I don't know, on a pedestal somewhere, or on CNBC, sort of like talking about. I don't care about that stuff. What I care about is that I can make money out of a methodology that I can look at.
Look at George making money there. Look at that bar going up.
That's brilliant, mate. It's brilliant. That's really good.
Mate, we better let you go, shall we?
Get a McDonald's after. Yeah, I need to manage this stuff.
Get a McDonald's to celebrate.
All right, mate. Have a great week. And thank you.
Yeah, Wednesday at 9:30. I don't know, 9:30 GMT, not London time.
Yes,
9:30
that's
GMT.
still okay this week. Next week may change.
All right, guys. We'll
see you, mate. Have a great week.
Thanks, George.
All right. Bye-bye.
Okay. Thanks for George and that marvelous analysis. We kept him a little bit over time today, but fascinating stuff, mate. And you're right. Look, he's put so much work into that. And as you said, I just haven't got the time or the inclination to do that study until if it turns out that my stuff doesn't work, maybe I have to change to something else, but it won't be that. Too hard.
Well, I think that's the key, mate, is that if you've got something that works, then why deviate? We don't need, and we always sort of say, you don't need to kind of be fueled about greed. Somebody's making this and that person, but it doesn't matter. It just matters that you understand a specific way to approach the market and it makes money. And if it does, why would you change? Why do you need more? It's all about the hockey stick. It will eventually go bang. You'll get that compounding aspect at some point, as long as you're grinding forward all the time. Now we got some questions in the room. Do you want to deal with the questions, mate, or do you want to?
Yeah, no, let's do that, because I haven't got any trades at the moment, but I've got a few things to look at later. Okay. G'day, Lewis. A long time no see, indeed. Gary, you're right, as we said before, but Ash, you've got a few from David there.
Yeah. Okay. Let's have a look. Now, incidentally, I've just taken a short in the FTSE 100, and I'll show you. I'll show you what my kind of thinking of this is.
Cool.
Very, very briefly, it will be. It's the same, I think George is right, but I'm just sort of taking a slightly longer term view on this. So let me just set my chart up here.
This is fantastic for people in the room who are new to trading. You've got a guy who's an expert on 5-minute charts trading long the FTSE, and you've got a guy here who trades the FTSE full time, who is now taking a different view.
Yeah,
both can be winners here.
Yes. I mean, I'm short in two places. I took a short on Friday here because there was a bit of structure. Now that structure has been broken, but I'm not too concerned about that structure being broken. I've just taken the short here because there's a little gap here, and now that gap's been closed. I'm interested in this selling off. Now, I'm not taking a signal necessarily. I'm taking my view that the market, I'm surprised that the market gets any kind of rally. And I think that we are probably at relatively significant levels. A little bit further, maybe. I've got one more short to take, just a little bit higher in about 50 pips or so. I've got one more short to potentially put on in the market. But I'm not hedging. I think this has come a long way over the last couple of weeks. And I wouldn't be surprised at all just to see a little bit of downside, not maybe loads, but a little bit of downside. And it will be just a case of aggregating the position on the short. So I've got is around about 90 pips between the two. So as soon as it hits 45 pips below where we are now, which is going to be somewhere in this area, then I'm flat, and then anything below there's going to be some profit. So if it gets down to the low of the day, then I'll be in a bit of profit, and I only need to see first contact anyway. So I'm building a short position, but as I say, mate, it's more because I think the sentiment of the FTSE is going to change. I just think that we are at potential resistance here. You look along here, this point, this could start to look like a diamond formation on a longer term time frame as well. And I'll quickly sort of illustrate that.
You've still got an intact head and shoulders. Yeah, I totally see that. You've got a trend line. It's all happening.
Yeah, so you've got it's probably somewhere around about there. It just looks like a diamond pattern to me, and it looks like that there's enough negativity to see us come down. I'm not saying it's a reversal. I'm just saying I will see us come down. So all I'm interested in is to see if there's an opportunity to go in a direction, and I think the most likely direction from here is a bit of downside. Because I don't
volatility still there though. Look at the charts; it's up and down like crazy, isn't it?
It is, mate. And I don't think that there's been enough resolution to suggest that we're going to get up here. I think we are still in this move lower with some excitement. I still see this as a bearish move ultimately with some excitement. This position here, this last structural point on the daily, has not yet been seen again. And I don't like that. That always makes me feel really, really uncomfortable about, the moves in the opposite direction. So I think an attempt to get back down to this point, maybe this breakout point here, is high. So that's why I'm looking at the short. And as I say, I haven't yet hedged the position out. Here's the trend line as well. Which You could argue we're significantly above. I don't think we are. If we do break out and there is a significant level, then looks like we're looking at the long. And all I'll do then is hedge it out. And again, I'm sticking with the short, and I'm going to stick with the short potentially until I see the market actually react to what I think is coming in the data. But that's a personal thing. So that's that. Now,
guys, sorry, mate. Before you go on, those of you who are listening to Ash and listening to the fact that he's short bias and short position this index, need to know that Ash trades without stops and he trades without leverage. So that allows him to build that position that he's building without fear nor favor. And as he says, he will then hedge if it does go significantly against him, and he'll limit the potential exposure that he has in that position. David, I think you've got a few questions around that. It's probably your last question, but maybe you should tackle that one first, Ash.
Well, the last question, okay.
Yeah.
Let me just see what the last one was. So also very key area below that one.
No, that's interesting. How does one build a position? Is the adding in as it goes against you?
Okay.
You'll have a method, I'll have a method, but your method is probably first up.
Okay. All right. So how to build a position. So now I think that so everybody's heard the term DCA, which is dollar cost averaging, and that means that you let me see if I can bring up this on the whiteboard.
I'll be away 2 seconds while you're doing that, mate.
Yeah, no problem at all. Let's do it over here. Right. So let's talk about DCA now. This, just as I was just saying about George. Oh no, I didn't want that, did I don't like this whiteboard. I'm just going to come off this. Just as I was saying about George with Al Brooks and how it resonated with him, this particular method won't resonate with everybody. So be very careful if you're going to go into this. This took me a little while to learn, and there's a way that you can do it without it being stressful. Because if you are, let's say you're looking at a long. Let's say you've got a market here. It doesn't matter what it is. Let's call it the euro dollar. And the market's been doing this, and you see that there's a level of support. So you go long here. So you're buying up here. Now, the first thing is that I don't want to use leverage. So in index terms, it's a lot easier to work out with an index. But if you say that the index of the NASDAQ currently sits at 14,359. Okay, that's the price of the NASDAQ. Now you'd have to work out the same with the euro. How you're going to break it down, euro dollar. So if there's 14,359, the minimum I need in my account is 14,359 to use no leverage at $1 per pip. Okay, that's the first thing. That is the rule with using no leverage. So that's gonna be the first thing. Now, if you've got the euro dollar, so the euro dollar is sitting at where is the euro dollar? Euro dollar sits at 1.10. 534. So you don't need $1.10534 in your account to have the leverage. You need to be able to break this down into what the multiple would be, because you're trading these here. You know, you need $53 if it goes back down to 1.1000. So you need to work out how much that whole thing is worth to work out what it means to be to not use leverage. I know that's not particularly well explained, but and I probably could. I will do the maths for you maybe next time out. But it's pretty simple. You've got this many pips, I suppose. So you probably need what we got 1, 2, 3, 4, 5. So you're looking at an account worth what looks like 11,053, I think. Would that be right, Jeff? To you? Does that sound right to you? Right. So if you're trading at $1 a pip, that's what you need in your account. So if you're going to trade with no leverage, then and you've got an account of 1,000. So if you haven't got a $10,000 account, you can't trade at $1 per pip. You've got to trade at 10 cents per pip to trade with no leverage. Now, if you bought here and the market comes down, then you haven't got a leverage position, and all it would have to go to 0 for you to lose at this particular point. But if it comes down, then obviously you're going to need to aggregate these positions out. Now, the second position does have leverage. You know, the second position that I would put on would have leverage. Now, if it starts to come down, you've got a little bit more of a problem. So at this point, what I'm now interested in doing is hedging. So now I'm not aiming for upside. I'm aiming for downside to protect this. Now, this whole idea that this is going up is based on a fundamental reason I think it's going up. I want a structural sentiment to suggest that the euro should strengthen against the dollar, a structural economic sentiment that the euro should strengthen against the dollar. If I haven't got that, in my view, I haven't got a trade. You know, I'm not looking at technicals first. I'm looking at what's under the hood, what my reading of what's under the hood first. So the FTSE as an example, if I look at what's under the hood first, it would suggest to me that we have not come out of the conflict. We're starting to raise interest rates, and companies are going to start to suffer. So there's going to be a recession. So that is my reason behind thinking of short on the FTSE 100. So you're going to need the same with the euro dollar. You're going to need a fundamental reason if you follow the same methodology that I do. Now, what that means is that I am confident that I am buying something of quality. So it doesn't matter how low it drops. I'm confident it's coming back to this position. So if I hedge here, then I'm making money on the downside here. But what I'm really doing is protecting. Now, I'm hedging with two positions. I've got two positions. I've got one here and one here. I'm hedging with two positions. What I'm really doing is protecting this whole area here. You know, yes, it's in a loss at the minute, but I'm not losing any more. Now what I want to do is start building my position again. Now I've got one position on again. If I put it on here, I'm leaving the hedge on. I'm not trying to make anything out of this at all. Because what happens is when this starts to come up, this stop loss is out of break even. And then as this one comes up, I've got a choice. I take profit here when it closes that, or I leave it on and I try and sort of like make the aggregate that I've got to get back to is a lot less. So that's the overview. I mean, it's sort of I feel like I'm starting to get a bit technical and maybe going to start to lose people. So maybe I shouldn't go down the rabbit hole too much. But that's the overview. There's a few more bits of detail that I would add, because what if it goes down again? You know, so these are the things that I have to factor in if I've taken a position. But that's the overview of what I'm doing. The hedge is there to say that I still believe in this product. And if I still believe in the product, then I'm going to buy again, but I don't want to buy with leverage. And the hedge allows me to take the leverage off the table again, which is why I'm hedging there. Now, if this market is coming down and all of a sudden I've changed my mind, then what I'm going to do is hedge and add. So now I'm not using leverage in that direction instead. And the reason for that is to try and eventually clear out these two. And if the trend is to the downside, then it will clear out that instead. So it gets quite convoluted when the work starts. It gets tricky. There's no two ways about it. You know, it can get It can involve some work if it goes against you. Because what I really want to do is buy here after it's come down and just take a bit of profit here. Come up there, close the position, come out the next day and try and do the same thing. Now, more often than not, that happens, but every now and again, it does go the other way. And then I've got to kind of get into work. But my hedge is your stop loss if you use stop losses. Neither of them is better or worse than the other, as long as you understand how to use them. So the hedge works better for me. I find that it resonated better with me to hedge. So that's what I do. But I don't think it's for everyone. It can get really involved, and if you're not careful, you can blow up your account because you're not disciplined enough to forget that to remember that the hedge is there purely to protect the longs. If you think you can take profit, you buy here, it drops. You buy here, it drops. You hedge, and then you take profit on your hedge here. Now you've got exposure with all that down. Now, if you haven't got the mental aptitude to understand the hedge is not there to make money, it can be difficult. And the reason I know that is that when I started figuring out this method, that's where I was. But I don't do that now. I've really tidied it up, and I feel quite comfortable with how I'm able to do it. And I know I've said this before, and I don't mean to sort of say this as a brag, but I've had a winner every single day so far this year, and I've had to use this situation 3 times, and it's worked. But it's taken me a long time to get into the right mindset to be able to do that. And all I'm doing is taking little bits. That's all I'm trying to do out the market. I'm not trying to make big money. I'm trying to make a little bit. But it's important for me to make a little bit because I'm trying to make money every day. And so far this year, as I say, I have done. So that's the way. Yeah, it's been a great run, Lewis. It's been a great one. And let's not forget that the market conditions need to be correct for that to happen. And they just have. I'm not going to put that down to 100% skill. I'm going to put that down to 60% skill and 40% fortune, because the markets have been particularly fortunate to me, and I'm under no illusions this run will end, and when it does, I've got some work to do. But so far this year, not a problem. But have you noticed the start of this year has been hyper volatile? Now, as soon as that calms down, we got a different market condition, and I'm going to need to recognize that and change how I do things. Otherwise, then I'm going to be sort of thinking I'm bulletproof and invincible, and nobody is. Things will go wrong, and I know they will. But so far, it's fine. But as I say, that the reason I'm making that point is that I've had to use mental aptitude to get the hedging system in place correctly. How did you learn this method? Seems very hands-on, even with limit orders. I've tried. I learned it by doing it. This was self-taught. And some things people can give you, and some things only experience can give you. I'm sure Jeff will say the same thing. I'm sure that the slingshot strategy has tweaked over the years because Jeff has put his own personality onto it. So nobody's taught me about hedging. It's just something that I figured out. And that's the way I do it. I mean, this is the thing. There's many ways to hedge. I mean, that's just the way I do it. There's probably a million different ways to do it that are much better than mine, but that's just the way that I do it. It works for me.
Yeah, awesome, mate. Thanks for sharing that. I would love to be able to learn how to do that, frankly, but you need time, and you need to have just that little bit of, I don't know, we spoke about it with George. If you've got it to actually investigate and research and just do the work, then you will come up with your own system. There's no question about that.
Yeah.
But I simply don't have time to do that. So just very briefly, from a person who does trade with leverage, David, to answer your last question, Ash, if you could just briefly work on those previous ones.
Yeah.
When I'm finished, and this won't take long at all. So I'm currently in a Euro Aussie short, and I am looking to build a position. Why? Because I believe, just like Ash said before, he believes in the product. I believe in the currency pair, and the currency pair, to my mind, will go to 146, which is around about here somewhere. We're currently at what, 150.75. Oh, sorry, that's where my stop loss is. We're currently at 149.50. So we've got about, let's say, 350-400 pips to go here. And we're, I don't know how many pips we are up now, I've got no idea. Let's say 220 odd, right? But I've taken profit all the way down here because I see that as a support level. So I'm looking to build the position the way I do things in this fashion. I want to stay in the trade, but I've taken profit here, I've taken profit here, and I've got a quarter of my position left on the table. But I'm more than willing to risk, if not all what I've banked, most of what I banked, in taking another position when I see, and here's the difference for me, when I see a setup. So in other words, it's a new trade for me. So I'm waiting to see a setup at a significant level. In my case, it'll probably be a trend line, or maybe a weekly pivot, maybe a previous horizontal level. It could be anything. But if I see another setup, then I will build my position based on that setup. And it'll just be like a new trade. So if it's worthy of 1% of my account, then I'll add 1% to that. It's pretty much that simple for me. It's not a rocket science formula by any stretch of the imagination. But once I'm in profit, I can't lose on this overall trade. I'll then look to add to my position. It's pretty much that simple. Okay, covers my very, very simple way to trade that, until Ash comes back and looks at those other questions that you have, David. I'll just very brief.
Most of them are about the Euro Aussie, actually, mate.
Oh, okay, cool.
From what I can see.
I haven't really read them. What are they? Is this pertinent to me or to you?
Well, the question is about drawing levels on. Well, I mean, one of the main questions is about how to flip between timeframes. You know, what's the significance of flipping between timeframes? So, you trade the 30-minute candles. How much importance do you put on the daily levels when you're looking at the 30-minute chart?
Not a whole lot, I've got to say, but I may have a position on Euro Aussie short, which I do. And I think on Thursday we will trade this long, will we not? If my memory serves me correctly, because we had a setup that suggested that we go long, and for no other reason than that. A 30-minute chart is completely different to a daily chart in terms of directional bias, in my humble opinion, because inside a day, everything's not going to go in the same direction as the daily chart will ultimately finish, right? So if the daily chart starts at, I don't know, 150, 129, it might go through 150, 110 up to 150, 150 before it closes at 150, right? So all of those things are possible. If I have a trading system that allows me to trade on 30-minute charts, I don't really care what the daily chart finishes like. All I care about is what's going to happen inside that 30-minute window, or the couple of 2-hour window, really, that I'm in front of the charts and trading a 30-minute chart. And if the market suggests to me, or price suggests to me, that the market will push price in this direction, I'm more than happy to trade in that direction. And that was indeed the case. On Thursday, I was looking to trade this long, didn't get a trade in the market, but I put an order in the market, didn't trigger. But that happens to me frequently if I'm trading short, and on a 30-minute chart, I can trade long, simply because I'm only looking like you, Ash, to take, 10, well, not 10, but 20, 30, 40 pips out of that particular session. 200 pips is completely irrelevant.
I'm actually the flip of that. So the daily chart plays the biggest aspect of my trading, And so that's the most important time frame to me, the daily and the 4 hourly maybe. If you bring up the Euro Aussie, you got it there, right? So if you put the Euro Aussie on a daily, this would be my process, David, personally. When I look there, I see if you like, as a double bottom. There's some support there. There's a horizontal line of support. We've bounced at this area 5 days ago. Bounced from this area 5 days ago. So as soon as I see this, so we bounced from there before. Now we're back to that same area. So for me, we are at the structural lowest point of that daily pattern, that daily structure. Then when I flip to the 30-minute, so if we go to the 30-minute, what I'm trying to ascertain is where is the low of the day, and that's where I'm putting my stop. I'm not going to put in put my stop. That's where I put my hedge. That's where I'm thinking I'm wrong on this. Same mindset, but where are you wrong? Whether you stop loss or hedge. So where's the low of the day? And as soon as I'm trying to carve out the low of the day off the 30-minute. So as soon as I see that hammer down there, and then the bar that took off, and it broke a little trend line of the pattern on the left hand side. There's a little trend line from the left there, but lower down, mate. Yeah, in those areas there, there's a I'd sort of come down to there, and I think that there's a test, and then you get that sideways consolidation, inverted head and shoulders. That for me is a trade on the 30-minute. So I'm trying to get the signal from the 30-minute starting to trend away from where I think support is on the daily, but I want to find support on the daily, because I'm only after 10 to 20 pips. I'm much more likely to get 10 to 20 pips on a daily, bouncing away from an area, even if by the end of the day, it's actually going to end up closing below this area. For me to find those significant levels on the daily, and then switch down to the 30-minute chart in this example, for 20 to 30, it's more like 20 to 30 pips to 40 pips maybe. To me is that increases the probability, because there will be people that would be buying this on the bigger traders are coming in because they think there's a daily level. So they're going to be coming in, but we don't need that. We just need a little bit of a push for an hour or so during the day. So the daily plays a big part. That's the most important levels for me, the bigger time frames, and then just trying to squeeze a few pips on the daily on the lower time frames.
Yeah, super interesting. And we said it before, how many ways there are to actually get into a market and trade it. Yeah. It's just crazy. Yeah. And, at the end of the day, you've got to find that way for yourself. It's as simple as that. Sorry, I should never say that. Trading is not simple, nor is it easy. I've heard it said that it's easy, but not simple, and simple, but not easy. Look, you just got to find, it's like water. You've got to find the level that suits you. It's pretty much a game of get all the information you can, no question, and then manipulate that information around what suits you, whether it's time, whether it's risk profile, whether, all of those things come into it, no question. But nothing will replace time in front of the charts. There's no question about that either, in my humble opinion, certainly on smaller time frames. If you want to trade smaller time frames, you must spend time in front of the charts. There's no replacement for that. Yeah,
totally agree. We better push off, really, mate. We're about 10 minutes over. I've got some reports.
Are we? Right? How did we do that?
Good session though. I think George's trade is fantastic. Really, great way to start the week. And we'll see what happens with the FTSE trade that I've taken as well. See what happens with those euro trades that you're looking at. See whether that pound Aussie manages to get the bounce. Pound Kiwi manages to get the bounce that we both believe is potentially there. This is case in point, actually. Pound Kiwi is at a level of support.
The same, isn't it? Yep.
Level of support. However, there's a support level just below it as well with the trend line. So at this stage, I'm there going, okay, now I want to see these smaller time frames show that there's going to be a little trend to the upside from this point, because actually we may not have been, we may not have the bottom just yet, but now we're here, double bottom. There's a decent chance that we do get a bounce. Now, if we're only looking for a bounce for an hour or so, I think we got a high probability chance of making some money. If we're thinking that this is the low on the daily, I think our chances decrease a little bit.
Yep, 100% agree. And that's the challenge that we've got. If we're trading daily charts, you can't go long here. But if you're trading short-term charts, then, you know, same thing applies as we said before. If you've got a reason to go long here, and what's that, a morning star for you, Ash?
Not quite. It looks like a failed. Yeah, that actually looks like a false dawn.
Right. Okay. So
didn't make it, did it? I mean, it doesn't. From what I can see, it doesn't make it into 2/3 of the way into the first bar of those three. Doesn't close 2/3 of the bar. It's about halfway by the looks of things. So that would be a false dawn for me. So pretty negative. I'd want to see it break the pattern, mate. That's what I'd want to see. Yep. I'd want to see a pattern be broken on the short-term time frame, then trade up to the weekly pivot, just for some pips on the day.
Yeah, no argument from me. I need to see a reversal pattern here, and it doesn't matter what it is. It can be morning star, it can be a double bottom, it can be an inverted head and shoulders. I don't care what it is, bullish engulfing bar. But that's only the first part of the equation. The second part of the equation is I've got to see a higher low after that before I can trade it long. Exactly the same as George was describing before. That's my MO for a reversal. And, you know, on a 30-minute chart, that's really all that counts here for me.
Yeah.
I don't really care, as I said before, what direction this is going. And to me, it's going to here at some stage.
Yeah.
Somewhere, sometime, whether that's today, tomorrow, or next week, it doesn't really matter. In the first instance, the 30-minute chart is telling me that there's a potential for this to go longer, but it's only potential until it sets up. So
yeah, because right now, actually, the trade is to the downside on the short-term time frames, in my opinion.
Yep.
Yeah. Grand. All right, mate. Well,
right, let's get out of here.
We better get out of here. Have an amazing weekend, guys. And weekend. Have an amazing day. We'll see you on Thursday. I'm wishing our lives away, Jeff.
Don't do that. Please don't do that.
No, we don't want to do that. Stay safe, guys. Thanks so much for the participation. Really appreciate it. Thanks for coming in. Good to see some numbers in the room as well. Didn't say goodbye to Lewis, and I feel like we didn't say hello to him properly either. So we'll have to make sure we do that on Thursday.
Okay. Hello,
hopefully,
Lewis, Thursday.
hopefully John will be So yeah, write that down. Note to us. We must say hello to Lewis properly. I haven't seen him for ages, so good to have him back in. We will we'll be back Thursday, maybe for the quiz with John. If he's not in, do we write one, Jeff, and spoil the quiz?
Here we go. Maybe. We'll put that as a maybe. We'll have to discuss that privately, I think.
Okay. All right, no problem.
All right. Now, excellent point to finish on. And we've just discussed this particular currency pair, pound Kiwi. And we both want to go long pound Kiwi. The issue is right now, there's no setup. The wonderful thing about trading is it's not compulsory. So don't feel you need to trade at any stage on any currency pair, any index, because you simply don't have to. Wait till it comes to you. Gonna go. Have a great week. Bye-bye for now.